Pantheon AI presents Markets Crash as trade deficit explodes 22%. Alibaba surges on AI chip news. Welcome to the PAI Morning Briefing. I'm John, and today is August 29th, 2025. So grab your coffee and let's get right to it.
Good morning, everyone. I'm Sarah, and I've definitely got my coffee ready. It feels like we're going to need it today. So, John, what are the numbers telling us this morning?
Well, let's take a look. We're seeing a bit of red across the board. The S&P 500 is trading at about 64.58, down just under 0.5%. And the Dow, our old reliable, is sitting at 45,484, dipping by about 0.25%.
Right, so some cautious movement. And it looks like the Nasdaq is feeling it a bit more, down nearly 0.75% at around 21,462. That reminds me of that old saying about tech-heavy indexes. It's like riding a roller coaster on a windy day.
That's a perfect way to put it. Even the Russell 2000 is down by about 0.2%. And for anyone watching the crypto space, it's an even steeper slide. Bitcoin is down nearly 3.5% to about 108,000, and Ethereum is down almost 4%. It's definitely a cautious session on all fronts.
So now that we have the numbers, what's the story behind them? What's driving this mood?
Great question. The pre-market chatter is all about a few big themes: inflation concerns, global trade tensions, and of course, the constant push of new technology. It seems like investors are trying to balance present valuations with a whole lot of uncertainty about the future.
It's like watching two different philosophies clash, isn't it? On one side, you have investors flocking to stable, dividend-paying companies. And on the other, you have the tech visionaries who are still betting big on innovation like AI, despite the volatility.
Exactly. It's that classic debate between value and growth. And speaking of innovation, we have some really interesting corporate news. Let's start with Alibaba.
Alibaba. They never fail to give us something to talk about. Their stock has been on the rise, and it seems to be all about their cloud computing business. That segment's revenue jumped 26% year over year. Plus, they're working on a new AI chip.
That 26% is a huge number. While other companies are struggling with growth, Alibaba seems to be sprinting ahead. It's like they found the perfect recipe, blending their e-commerce strength with some serious high-tech wizardry.
Definitely. Now moving over to the U.S. market, Affirm has also been making headlines.
Right. Their stock surged around 15% after CEO Max Levchin made some really upbeat comments about consumer strength. You know, there was some worry earlier this year when it looked like they might lose a major partner like Walmart, but they seem to have weathered that storm.
It's a great story of resilience. It really shows that the market for these alternative financing models, the buy now, pay later space, isn't going anywhere. It's a good reminder that sometimes the less traveled road can lead to some positive surprises.
Okay, but it's not all positive news. On the trade front, we're facing some pretty sobering figures.
Yikes. Let me guess. The trade deficit? I saw that headline. The U.S. trade deficit in goods widened significantly in July by about 22%, hitting roughly $103 billion. That's a big jump.
It really is, and it has traders and policymakers asking some tough questions about our economic recovery. It's funny, isn't it? We get so captivated by flashy AI innovations, but then a traditional metric like the trade deficit comes along and reminds us that economic fundamentals still rule the day.
That's a great point. It's like a blockbuster movie. The special effects are cool, but you still need a solid script and a strong storyline to make it work. In this case, the storyline is our core economic data.
And that storyline gets even more interesting when you look at the industrial sector. Caterpillar, a true bellwether for the economy, just issued a tariff cost warning.
Oof. So they're bumping up their cost estimates because of tariffs, which means earnings targets are getting cut. An analyst at Raymond James is even predicting others in the industry might follow suit. That's a pretty stark reminder that even titans like Caterpillar can't escape the ripple effects of global trade policies.
It really is. It just goes to show how connected we all are in this global economic web. So, Sarah, when we put all these pieces together, Alibaba's tech leap, Affirm's consumer strength, the trade deficit, and Caterpillar's warning, what's the bigger picture?
Well, I think it shows this incredible tension. On one hand, you have companies like Alibaba showing that the cloud and AI are still massive growth engines. It's like they're upgrading their car mid-race. But then you have these fundamental pressures like the trade deficit and tariff costs that are putting the brakes on traditional industries.
And Affirm fits right in the middle, doesn't it? It's a tech-driven finance company that relies on strong consumer behavior. Their success makes you wonder, is this the future of finance, or is it just a niche phenomenon for a tech-savvy generation? These are the questions that keep us up at night.
They really are. And that trade deficit number, it begs the question of whether this is a temporary spike or a more permanent shift in the global supply chain. For long-term investors, that context is everything. As you like to say, John, numbers without context are like a joke without a punchline.
Exactly, and the warning from Caterpillar feels like the punchline we need to pay attention to. When a company that builds the world's infrastructure starts to feel the pinch, it's like noticing the wheels on the bus are starting to wobble. You know something's amiss.
So beyond these specific stories, we're also seeing broader themes emerge. There's a big shift in supply chains, with companies now prioritizing resilience over just-in-time efficiency. They're building systems that can actually weather these storms.
And at the same time, the AI revolution just keeps accelerating. It's not just about making operations more efficient anymore. The real question is, how will it fundamentally change consumer behavior and reshape entire sectors? That's the billion-dollar or maybe trillion-dollar question.
And all of this is happening while central banks are trying to perform a tricky balancing act with inflation and interest rates. It's like our economy is a grand orchestra, and if one instrument is out of tune, the whole symphony can sound off.
It's a perfect analogy. And it highlights how interconnected everything is. The cautious trading we saw this morning doesn't happen in a vacuum. It's a reaction to inflation in Europe, supply chain issues in Asia. It's all part of one complex, global dance of risk and reward.
So for our listeners, what does this all mean? I'd say one word: diversification. The market is clearly in a measured, cautious phase. We're weighing all this amazing long-term potential from tech against some very real short-term economic pressures.
I agree. My take is that while we'll see more volatility, these shifts feel more like recalibrations than signs of an impending crash. You know, sometimes watching the market feels like trying to perform ballet on a tightrope made of spaghetti. You have to be nimble, observant, and maybe a little fearless.
I love that. A spaghetti tightrope. That's exactly what it feels like. So the key takeaway for today is that all these stories are intertwined. Alibaba's tech success, Affirm's resilience, the trade deficit, Caterpillar's warning. They all paint one complex picture.
And the art for investors is to untangle those threads and build a strategy that's both resilient and ready for opportunity. Before we go, I want to leave our listeners with a few questions to think about. Are you diversified enough? How are you positioned for the AI transformation? And what does your risk strategy look like on that spaghetti tightrope?
Great questions to ponder, and of course, a big shout out to our information co-pilot, Pantheon AI, for helping us make sense of it all. Your engagement and questions are what make this dialogue so rich.
Absolutely. Thank you all for joining us today. We hope we've sparked some new insights and maybe even brought a smile to your face. We'll be back tomorrow to do it all again. Until then, stay curious and enjoy the ride.
Pantheon AI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.